Welcome to Markets Now. I'm Michelle Rook along with Kevin Duling with KD Investors. Update in the livestock grains are lower. And let's start off with grains, Kevin, because we've been seeing some profit taking, especially in corn and soybeans. And we do have some rain in the forecast. And so, how much of a correction do you think we're going to see here?
Well, it could be a one-day wonder. I mean, I guess 2 days counting yesterday, but we'll see what everybody's going to be glued to the screen for, forecast rain amounts and actual rain amounts. You've got the small speculator long, you got the hedge funds a little bit long corn and soy. So everybody's scaling back for the weekend. It's a pretty predictable slide today. Monday is going to be a who knows type of thing. I mean, we could reverse this. We could continue lower. I think it's too early to break the corn market too far. The patterns we're looking at, I mean, there's some water in them, but not, the plants are going to be coming into their maximum water usage here shortly. And I'm not seeing anything that would suggest we're going to get those numbers yet. We'll see. So, this model writing time we're in is frustrating and makes you lose your hair. But
Yeah.
So I don't know. I guess I'm to the point where I feel like we've got a long way to go for this crop, and every Friday we're gonna see kind of an opposite type of move.
Yeah, with 64% of the corn acres in some level of drought, it's going to take more than one rain here to reverse that, isn't it?
Oh, absolutely. Like I say, we're going to get up to that time where the crop's needing a 1/4 inch to a 1/3 of an inch of water a day, and the subsoil's depleted in a lot of areas. Yeah, and I was visiting with an agronomist yesterday, and he was saying that if your corn's in that 6 to 8 leaf stage, the plant is already determining how many kernels you're going to have that go around. And if we back that off by 2, let's say at 14 to 16 is normal and we're going to be 12 to 14, well, that's a 15 to 20% drop in kernels. So that is a huge amount. Now we can gain some of that back, he said, if we have perfect weather from here on out, but you're not going to gain all of that back. So
Right.
we're just doing numbers, playing with numbers. I was bullish corn if and only if we could get the yield down below 165 based on the South American crop. But now those numbers are in play. So
Yeah.
I'm still not quite down to that, but if we have a hot July, if we bring the heat on and we just have pop-up showers or just normal rainfall, normal's not going to do it. We've got to have an above normal system that pretty much parks over the center of the Corn Belt, and that's the only way we're gonna get those numbers, And so damage is done. Point being,
Right.
damage is being done at this stage, even though the corn looks decent in some spots.
Yeah, so we're not at record yields, this 181.5 on corn. What are we trading in? We know it's lower, so will USDA acknowledge it in the WASDE?
I think they'll acknowledge some, but I don't know how much. They probably should have acknowledged it some in the June report, but they'll I don't know. They'll probably come in at 177 or 8 or something like that. But I started at 177, and now that we've had problems, we're backing that off. So they're going to be behind the 8 ball on that. But I think the market knows that, and the computers will trade it for a while, but reality will follow up soon. But
yeah,
it's not time to declare a full disaster yet. I don't think. I think we still have time, but like I say, it's going to take an anomalous type of weather pattern, where the magnetics shift over the Corn Belt for us to really gain that yield potential back. So
yeah. So some of this was obviously some profit taking as well. We had a $1.40 rally off the lows in December corn. We had over a $2.50 rally off the lows in the November soybeans, although the rally for beans kind of came a bit early, didn't it? Especially since that's an August crop.
Seems, yeah, to me it is. It's just the funds, they've been covering the wheat, they've been buying the corn, buying the soybeans. And yeah, soybeans is too early. But at the same time, you look at our export sales this morning, we had a great number for old crop soybeans. Um, and that's what really we need to carry markets. These production spikes are great. They're great hedging, selling opportunities. But in the long run, if we want to see higher markets, we've got to have a demand-led rally. And so soybeans, if we're selling that kind of beans right here, that looks pretty good to me. So I don't, I guess I'm optimistic a little bit based on today's sales report. So
Yeah. And speaking of exports, not great for corn or wheat. So is that why wheat is down today, or is wheat just following corn and soybeans, or what?
yeah, we's following along with the trend. I mean, the thing I'm noticing, the funds definitely want out of that large short position. There's been 2 days this week. Today, one of them, I think Tuesday was the other one, where we were down pretty hard early, and then the buyers kind of showed up. And it's not so much buying; it's those funds covering that short position. And so they're changing their tune in wheat. Wheat's got it's got a really supportive backdrop going for the next year. So with the production drops we've seen in the last 30 days in India and China, the EU, Canada, the US, there's no reason to be short wheat. So we needed to get that market up and out of, away from corn a little bit, and it's doing that. But the big pull in the next couple of weeks is still going to be the corn weather, and that's going to trump everything out there. So
But you believe at some point we need to do some demand rationing in the wheat market from a global perspective.
I do. There's a couple reasons. One, we've got a lot smaller crop worldwide than last year. USDA hasn't caught up yet, but they will. It may take 4 months, 5 months, but they'll eventually get there. The bigger story is the demand side. Wheat demand grows 1.2 to 2% per year, and this will be our fourth year in a row with flat demand. And every time that happens, we usually get a big push in demand to get caught up with that historical average. So, yeah, wheat it's not going to be quarter one. There's a lot of wheat around. We've got a lot of wheat that's going to get fed worldwide and make up for the lack of corn. But as we go into quarter 2 and 3, then wheat should have a life of its own there and be, and have to ration away from the corn market, the feed market, and should give us one more really good opportunity for wheat prices before 2024 and beyond.
All right.
So
Well, hopefully folks are ready for that because obviously they're looking at these prices and hoping for a little bit more upside. What about this cattle market? Let's talk about that one because it seems like yesterday live cattle futures kind of held some support areas on the charts that we needed to. We're starting to see the market lose a little bit of its early strength as we go through. But where do you see the market going, Kevin?
well, the numbers are great, and the demand numbers are great. Right now, you've got kind of a psychology. Basically, it's attached at the hip with the corn market, so going the exact opposite direction. So today we're up pretty strong based on corn being down 20 cents. So we could see some more pressure back in that market next week if corn takes off to the upside. But I think those present buying opportunities if we get low enough, like yesterday, day before were. But overall, the numbers are great, and I just don't see that market backing off too far yet. So
Yeah, no doubt. I think you're referring the big gains today are really coming in that feeder market, which you would expect here with the pullback in corn, right?
correct. And with that said, I've got a bullish posture on the market, but we've got great prices now anyway, so it reflects that. But one product out there that if livestock growers haven't paid attention to is that LRP contract that the government supplements some of the premium of. That's a great product. I mean, you can't buy puts, it's too scary to sell futures most of the time. So it's a great product that people need to look at, and we've done some of that. And like I say, if we get another $5 to $10 bounce, get back to the highs, I would sure look at that LRP contract because it's a great way to set a floor for fall and winter. And there's some macro headwinds we're going to face, and who knows what tomorrow brings. So I would recommend that. So
No, I think it's a great point that you make. We're up at some really historically high levels, and so you really need to protect yourself here because it could get pretty volatile. But thanks for joining us, Kevin Duling with KD Investors. That's Markets Now.